Hello everyone. Today I'm going to discuss with you overview of capital markets. Capital market is an institutional arrangement to raise and invest long-term funds, both equity and debt. The savings of the community are mobilized for industrial and commercial enterprises and for the public in general. Capital market facilitates the savings into most productive use for the growth and development of the economy. There are two types of capital market, primary market and secondary market. The primary market is also known as the issue market. It deals with new securities which are issued for the first time. The main function of the primary market is to facilitate the transfer of investable funds from saver to entrepreneurs, to establish new enterprises or to expand existing ones through the issue of securities for the first time. The investors in primary market are banks, financial institutions, insurance companies, mutual funds and individuals. Companies can raise funds through the primary market in the form of equity shares, preference shares, debentures, loans and deposits. The purpose of raising funds may be setting up of new projects, expansion, diversification, modernization of existing projects, mergers and takeovers. Methods of floating new issues in primary market. First method is offered through prospectus. This is the popular method of raising capital. Companies issue documents called prospectus containing information about the company and invite public to apply for shares and debentures. However, direct selling of securities can be successfully employed if companies want to approach only a small number of institutional or other large investors. A company can convince such investors through conferences, personal meetings, advertisements, etc. Another method is offer for sale. This method is generally adopted in case of large issues by companies. Under this method, the issuing company sell or agrees to sell securities for sale to certain issue houses or specialized financial institutions at a fixed price. The issue houses or specialized financial institution then issue advertisements making offer for sale of such securities at a higher price than the price they obtained these securities from the issuing company. The objective of this method is to ensure success in the sale of security. Another method is private placement. Under this method, securities are sold by the issuing companies to certain intermediaries such as brokers, issue houses or financial institutions. These intermediaries such as brokers, issue houses or financial institutions privately place the issue to their clients and associates. The main advantage of this method that it is very cheap method. It's a cheap way of marketing of security. Tender method. Under this method, marketing of securities, the issue price is not predetermined. The company invites bid from various interested parties. These parties participate in tender and submit their bids or we can say the price they are willing to pay. The company, after receiving various offers, may decide about the price so that the entire issue is fairly subscribed. Another method is right issue. Rights issue is an invitation to the existing shareholders to subscribe for further shares to be issued by a company. Section 81 of the Companies Act has provided a preemptive right to the existing shareholders to purchase shares in further issue of the company. A company can make offer or right issue after meeting the requirements as laid down by the SEBI. Now, secondary market. Secondary market is also known as stock market or stock exchange. It is a market for the purchase and sale of existing securities. It provides liquidity and marketability to existing securities. Securities are traded and settled within the framework of SEBI. Stock exchange. Stock exchange is an institution which provides a platform for buying and selling of existing securities. It facilitates the exchange of securities into money and vice versa. It helps companies to raise finance, provide liquidity and safety of investment to the investors, and enhance the credit worthiness of individual companies. National Stock Exchange. It is the technology driven exchange. It was incorporated in 1992 and was recognized as the stock exchange in April 93. However, it started its operation in 1994. Bombay Stock Exchange, it was established in 1875. It contributed to the growth of corporate sector by providing a platform for raising capital. It had a set of rules and regulation to ensure an orderly growth of the securities market. Functions of stock exchange. It provides liquidity and marketability to existing securities. It determines price of securities, ensures safety in transactions, contribute to economic development, provides sufficient scope for speculation. Let's talk of reforms in capital market. First point is dematerialization of shares. Dematerialization of shares has been introduced in all the shares traded on the secondary stock markets and those issued to the public in primary markets. Even bonds and debentures are allowed in demat form. The advantage of demat trade is that it involves paperless trading. Second is screen-based trading. The Indian Stock Exchange were modernized in 1990s with computerized screen-based trading system. It cuts down time, cost, risk of error and fraud, and thereby leads to improved operational efficiency. The trading system also provides complete online market information through various inquiry facilities. Establishment of Securities and Exchange Board of India. SEBI. SEBI became operational since 1992. It was set with necessary powers to regulate the activities connected with marketing of securities and investments in stock exchanges, merchant banking, portfolio management, stock brokers and others in India. The objective of SEBI is to protect the interest of investors in primary and secondary stock markets in the country. Establishment of National Stock Exchange, NSE. The setting up of NSE is a landmark in Indian capital markets. At present, NSE is the largest stock market in the country. Trading on NSE can be done throughout the country through the network of satellite terminals. It has introduced inter-regional clearing facilities. Investor protection. The central government notified the establishment of Investor Protection and Investor Education and Protection Fund with effect from October 2001. National Securities Clearing Corporation Limited, NSCL, was set up in 1996. It is responsible for post-trade activities of National Stock Exchange. Credit rating agencies. Various credit rating agencies were set up to meet the emerging needs of capital market. PAN made mandatory. In order to strengthen Know Your Customer norms and to have sound audit trial of transactions in securities market, PAN has been made mandatory from January 1, 2007. Assessing global markets. Indian markets are allowed to assess global finance market and benefit from the lower cost of transactions. They are permitted to raise resources through ADRs, GDRs, foreign currency convertible bonds, and external commercial borrowings. Thank you. I hope you like the content. Thank you.